Phil Palumbo joins us here. He's the founder, CEO, and CIO of Palumbo Wealth Management. Phil, what's the conversation you're having with your clients these days about, all right, we're up 6% in the S&P 500, but boy, it was a tough way to get there this year. Do I just keep my head in the game, or do I think about getting out? What's the conversation you're having?
Yeah, so we're long-term investors. Time in the market's a losing game. We do not do that. We're big proponents of owning great quality businesses and holding them for a long period of time. Cash flow generative is really important as it relates to the businesses that we own. So time and things are very difficult, right? But in the short term here, we're definitely seeing some complacency in the market. So I wouldn't be surprised to see volatility pick up. And overall, I think Trump pushes the envelope with tariffs here because markets are at all-time highs and the economy is performing okay. So I'm telling clients today, volatility is going to pick up. With volatility, there's opportunity to reinvest in some of the businesses that we own, and that's exactly what we're looking to do.
Some people were concerned, obviously, on the back of Friday's jobs report, but you're still positioning for strength in the economy in the coming years. Talk to us more about that.
Yeah, I really am as optimistic as I've ever been since I've been doing this for 25 years. And the reason why, over the next 6 to 12 months, from a myopic standpoint, I think volatility picks up. I think the economy slows, as it was projected even prior to this year, right? And you've seen it in the jobs numbers just on Friday. However, when you think 2-3 years out or longer, with AI and the spend in AI, productivity enhancement, and you see the permanence of the tax cuts, the benefit to business owners now have clarity on taxes. You could depreciate 100% of equipment, and all the onshoring that we're going to see in the spending of $1 to $2 trillion or more. And then eventually we're going to get the Fed will have to cut. All of that will be additive to the overall economy. So that's all pro-growth policies that I believe will see that really do well and perform well with our economy.
That being said, you've got a solid position in gold. Talk to us about your gold call, because man, that's been, it hasn't been a hedge. It's been a way to generate some big returns.
It's really funny. So I started my firm just over 5.5 years ago, and when I look at all the asset classes and the performance of the asset classes, gold is my best performer. Wow. 14.5% on average, right? So when we looked at gold, we said gold is a great hedge against a downward market. And that's essentially what it did when markets really declined rapidly. And we looked at research going back 80 years. So that's why we have gold as kind of a core in our portfolio. So, but recently, what we did is we took some chips off the table and we started adding to Bitcoin.
Ah, I see.
Ooh, well, Tom's not here, so you can say that. Well, when you're thinking about the direction of interest rates too, in that mid-September decision that's going to come up, obviously we have Jackson Hole in between now and then. That'll be August 22nd. What are you expecting to hear from Fed Chair Powell then? Because we still have another CPI report later this month before his speech then.
I think the Fed is making a really big mistake holding off on cutting rates, even 25 basis points. I don't understand what the big deal is in doing something like that, right? Because if you're cutting rates, you could always increase rates if inflation's a problem. He got it wrong coming into this back in 22 before increasing rates. And what makes you think he's going to get it right this time by holding off until you see inflation become an issue, which is really debatable amongst many economists today, right? I personally don't believe it's going to be a big inflation problem. So I think the Fed should really move forward, cut rates, and stabilize the housing market, because that's a problem, right? As ownership of homes today and affordability is at all-time lows. So we got to fix that problem. And I think cutting rates is the start to that.
In the fixed income space, how much credit risk are you taking for your clients here? Because I can sit in a 2-year U.S. government security, get 3.7% or something like that?
Yeah. So, Paul, fixed income, in my view, is a terrible investment over long periods of time.
Really?
When you factor in average returns of 4 to 5%, after taxes and inflation, you're at 0 to negative. You can't compound money over long periods of time and stay ahead of inflation from a spending standpoint. Our clients who come to us over long periods of time are working, retire, 55, 60, 65 years old, sell their business. When they come to us, we got to make sure that they're able to maintain their lifestyle and forever, right? Until the time comes where they're no longer here. So that's important to keep up with inflation. It's hard to do that when it comes to fixed income. So fixed income for us is approximately 20-25% of our overall clients' portfolios, obviously dependent on certain clients, but that's pretty much where we're at with that.
What's some of your top stock picks?
Yeah, so Google and Amazon is really been two businesses that we really liked for a long time. Adding more to Amazon after the earnings report last week, down 8%. Both of them are really cash flow generative machines that will continue to compound capital over long periods of time, and great businesses that will be sustainable over long periods of time. Both are involved in cloud business, which the total addressable market is about $1.5 trillion. So plenty of growth there. And if you look at the growth on Google's cloud, it's over 25, Amazon 17. I think that continues. I think these are great businesses to own for the long term.
Phil, thanks for coming in. Really appreciate it. Phil Palumbo, founder, CEO, and CIO of Palumbo Wealth Management. He's been doing his wealth management thing for a long time. A lot of conviction in his calls, working for his clients.